Burrows. Join the 1%.
Okay, we've got Lisa on the line. She's in Peterborough, Ontario. Hi, Lisa.
Hello again, and thank you for taking my call. I'd like to ask David, when is Xerox getting out of its slump? And give me some money. Thank you for answering my call.
Lisa, you know, you've asked a very tough question, and it's a question I got asked by many people along the way about Kodak. I think Kodak was in restructuring my entire career. And in the case of Xerox, ultimately it's going to come down to companies spending money, and corporations are certainly holding back on capital spending at this point. So I think that it's one that is for a different kind of economic environment, and you're basically hoping for economic capital spending, corporate capital spending to pick up, and I just don't see it happening in the meantime. In the meantime, you've got almost a 0% revenue growth, 0% earnings growth. You've got risk in the earnings if the economy continues to back off. I think that there's better places for you to have your money.
I hate to be cynical, but this name just smacks of the 1960s, and it was great then. But if the economy, hypothetically, if it were going gangbusters right now, would you want to be in a stock like this?
Look, the earnings for 2007 were $1.21. The earnings for 2008 were $1.12. 2013 from here is supposed to be $1.21. There's no earnings momentum in this company whatsoever. You pick up a 2.2% dividend yield, which is not anything particularly exciting. You don't see a lot of dividend growth. I think that there's better places to put your money.
Coal prices, coal stocks rather, are under extreme pressure right now. Mike wants to know about one of them. He's in North Bay, Ontario. Hi, Mike.
How you doing tonight?
Good. How are you?
Very good. Now, Alpha Natural Resources. I'm heavily invested in it in the high 30s. When it got down to 16, my financial planner decided I should buy some more.
Right.
And it's down to 8 right now.
Well, Mike, I'd love to tell you I know where there's a low in the stock. It is the worst performing group of all of the basic materials, which is one of the worst performing groups in the market. I'm not a value investor, so I can't help you pick a bottom here. I would say pick an exit point, you know, because at some point, you know, there is risk in these stocks. You had Patriot this week say that they're going to go into a reorganization, and I don't know when things are going to get better. So you'd be better to talk to a value investor who can really break up the company and say, what's it worth to some of the parts? That's just not my expertise.
No, but you may recommend just to bite the bullet and get out?
You know, and I don't know what you've got tied up in this thing, but ultimately you just can't afford to let stocks get away like this. To average down, first of all, just as a general rule, I would suggest never, ever, ever averaging down. Putting more money in your weakest performing investment geometrically increases your risk. You want to add to your strongest investments, not the weak ones. I think you really have to pick a line in the sand, Mike, as to where you'd exit because, you know, if the economy continues to back off, it can continue to get hurt.
Okay, David, thanks for that call, Mike. A short break here. More with David Burrows after this on North American Large Caps. We want to remind you, though, if you haven't done it already, all you have to do to get the Market Call newsletter every night sent straight to your inbox, you have to go to bnn.ca/subscribe, and you get all the picks and analysis from our guests on the Market Call shows.